It has been just this past 2 days. Winter's really picked up, and we've got a massive snowfall. But there's so much storage that prices are not moving. But it is picking up cold. Right now it's getting very cold. The last 2 days.
Autumn was warmer than usual, right?
Yes, you're right. It was, and it's very rainy as well. Very rain, a lot of rain, which usually doesn't happen. I mean, you saw the floods in the northeast around Tuscany, and all was quite horrible.
Good morning, everybody, and welcome to the Daily Energy Markets podcast. It is the 6th of December. Back when I was a young fella, that was the first day of Christmas, the 6th of December. The season, ho, ho, ho. Brent crude oil is not so ho, 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 however, dropping again this week, down this morning, a little changed in the opening trade in Asia, but trading just above $77 a barrel, which obviously puts it into an increasingly concerning space, I would suggest, for at least on the oil producer side, the OPEC Plus side, who, of course, faced a decision last week to make their next step move for the new year. Let's welcome Ali Al-Riyami, consultant and former Director General of Marketing at the Ministry of Energy and Minerals in Oman, and get his thoughts on the decision that OPEC Plus made and the subsequent commentary from the Minister of Saudi Arabia, which was a big interview earlier this week, where this decision takes the group forward. Your thoughts, Ali?
Good morning, everybody. Of course, we have followed the meeting this time with a little bit of concerns. Nobody was expecting the decision to go this way. But overall, I think there was some positive indications from OPEC that realized.
Let me just interrupt you there, Ali. You didn't expect it to go this way. What do you mean by this way?
Well, there was no consensus this time, and there was a lot of debates on African countries, as everybody knows now. And the only good surprise was Brazil is to join the OPEC Plus. That's the only positive. But all the other things that they were seen by spectators like us, that it was negative. Although that I see it in a different way. I see that the decision was good enough to reflect the reality in the ground. And but unfortunately, that most of analysis and most of the spectators they have seen it to be a negative, and the result of that we see that the prices have been affected at the moment. They haven't seen the brighter side of the decision, that there is another 900,000 barrels have been cut to the market, although that this will reflect the low demand in the coming few months. But again, I mean, there was a positive sign. The only problem was that there was no uncertainties, and then it was open to the countries to decide how much is to cut and who wants to cut and so on. So there was no such an agreement on the decision, but overall, I think it was okay. Not very good one, not the one expected, but it was a good result at the end. And majority of the GCC countries, they took it in a very positive way, and we hope that this will reflect the reality in the supply and demand side in the coming few months.
Well, let's welcome Vandana Hari, founder and CEO of Vanda Insights in Singapore. I suppose, Vandana, as the saying goes, the proof will be in the pudding. Certainly a hard cake that was baked, but it will be in the eating of this cake that the real truth will be revealed. Your thoughts on the decision, and also welcome any insights you picked up from the Saudi Energy Minister's interview with Bloomberg on Monday.
Good morning, John, and everyone. So I think there's a bit of an echo chamber effect in the markets right now, and perhaps worsened by the fact that, traditionally year-end, fewer players, lesser activity, fewer volumes in the market. In terms of OPEC, in addition to OPEC Plus, rather, in addition to the points that Ali already made, I think surprisingly to me, OPEC Plus seems to have made a couple of major rookie mistakes. I mean, I can't think of another word for it. So first of all, the market right up till the end of this year for December had been talking and thinking in terms of a 3 million barrel per day ongoing cut. And when OPEC comes out with a statement and says, we are going to deepen the cut to 2.2 million barrels per day, the maths just goes out of the window, right? So it didn't say 2.2 from where. Of course, it didn't give a proper table and, who's going to produce how much. But, I think to talk about a 2.2 deepening from a 3 is not really in good form. I think the other thing, and this was also surprising for me, frankly, was why they did not provide a more bullish signal to the market, as it were, by saying the cuts are until the end of next year. They could always review and revise it, but they fought shy of that. And in fact, they went to the other direction and said that these cuts will be gradually unwound after the first quarter of next year. So it doesn't work. I think what you referred to the interview that MBS gave to Bloomberg on Monday. I found it quite interesting, and it does seem like he and Alexander Novak, through some statements yesterday out of Moscow, seem to be trying to pump up the market sentiment a bit, but I'm not sure it will work. My main takeaway from the Saudi minister's interview, Sean, was that he laid out pretty clearly how Russia has committed to sitting together with, I think he said, 5 secondary sources out of the 7 that OPEC uses to independently monitor members' production, and 5 tanker tracking companies on the 5th of every month for a transparent exchange of data. So overall, I do feel that there perhaps is a commitment and an intention amongst the members, the 8 members that are deepening cuts, to actually deliver on it. But as you said, Sean, the market's going to remain skeptical and probably wait till the end of January, at the very least the beginning of the middle of January, to see whether the flows are actually going down. And, only then perhaps might we find some significant support to crude prices.
Let's welcome Maliha Bengali, founder of MB Commodity Corner. Maliha, your thought, I mean, we've talked a lot, obviously, this being a supply story, but ultimately, where is the demand story? As much as OPEC Plus can try keep the pole propped up in the tent, on the demand side, there's just a sagging outlook for the macro, both in China, now increasingly in the US, and already in Europe. Your thoughts on the demand side of OPEC's challenge?
Thank you, Sean, for having us. So you're absolutely right. I think a lot of the economists this year pretty much put in a number of a massive demand recovery from China and the rest of the world in Q4 without thinking about the economic cycle. We spoke about this in October on this very panel about how all our indicators are showing weakness in physical markets in the economy. We've seen China massively reopen and fail each time. We've seen demand numbers being soggy in US and Europe. And make no mistake, we've been saying it, the US is going through a recession and EU has already started one. So OPEC, I think, has miscalculated the demand picture because all the economists have been telling them that we have a soft landing. We think they'll be surprised. So demand has been a lot less keen to pick up. Then supply has picked up as well. We said that at the end of the day, the oil market has an excess of 4 million barrels per day. It really should not be trading here, but obviously it's staying here because Saudi and OPEC have managed to keep the market pinned here. We also think Saudi Arabia today is a very different Saudi Arabia than 2014 and 2020. All the talks about them flushing the market, they really don't have any cards left. That's why they have to be so, calm about the policy announced last week, because end of the day, they can't threaten the market. They're going to flood it, because if they do, they really lose out. So I think the statements that came out right now have been exactly as we expected them to be. Just do a rollover. The lollipop cut was meant to be just for 3 months, has now extended for 6 months, if not into Q1 next year. They have no choice but to wait and hope. And as we've said all along, the longer they keep the price up, the US economy, the US Fed is raising rates. That's killing demand to get inflation down, and that kills oil demand. And that is this game that the longer Saudi keeps the oil price up is going to make the Fed's job harder. We've been saying this for 3 or 6 months. So oil really is muted right now. Demand's been weak, and I don't see it picking up very far. Other than winter demand, it's not going to pick up. We might have supported here, but there's a lot of blind faith and a lot of hope built on the fact that oil will pick up once the economy picks up next year. And that's where the touching point is. Are we in a recession? Or are we going to get a massive recovery?
Ali, I mean, I was quite taken by the commentary by the Minister of Energy of Saudi in the interview on Monday, particularly in reference to Russia. A lot of the talk, as you mentioned, the difficult meeting that was had, or the virtual meeting that was had over the 2 weeks into the decision last Thursday, a lot of the talk was about, the African countries not quite being too happy with their quotas being reduced, or that it was generally the African countries which were the stumbling block. But listening to the interview with the minister on Sunday, it seemed to me that was a very different story. It was very much about Russia. I mean, the detail that he went into and just repeated there by Vandana, that the Russians will meet the first this of every month, and they're going to meet with these 5 these. And I mean, it's all about holding the Russians to account. And lo and behold, a day later, we get the announcement that President Putin is visiting Saudi and the UAE today. First, obviously, visit outside, I think, external visit out of Russia other than China in the 2 years of the Ukraine war. Your thoughts about the Russian-Saudi solidarity at the core of OPEC Plus, and how fragile it might be. Your thoughts on that?
It's a sweet and sour relationship. It goes either way. But anyway, before I answer your question, Sean, if you can just give me 1 second or 2 seconds to comment to what Vandana have said. I have fully agree with what she had said about the statements and also the meeting this time, and things went a little bit unexpected. She said some wrong things happened. But anyway, I think this is the problem with OPEC all the time. They communication with the media, communication with the outside world is a bit on a defensive mode, and they don't really react positively with the media, and they always underestimate the power of what we or you guys can do when it comes to read the numbers and read the results of any meetings, OPEC meetings and OPEC Plus meetings. And the reflect of that, we see it immediately in the prices. So until the market reacts and the market corrects itself, it is too late. So now to go to His Royal Highness interview is, to me, is just trying to, to correct whatever happens, before, and to try and give some more inside information to cool the market a little bit. But again, I believe that the market will react and also will reflect the reality, and it will correct itself, because I think it was over-exaggerated. The market over-exaggerate. I don't think that we should be in 70s at the moment, but at least I think maybe the few coming weeks, it will correct itself. And of course, it depends about Malia, what she says about the economy, the world economy, and so on. But I think below 80 or 75, it is very much lower than expectation. To go back again about to your question, I think this has always been the case between Saudi Arabia and also Russia. But normally, these things doesn't come outside the meetings. They have some concerns. They have their own agendas. Saudi Arabia is the largest producer. Russia also, they have their own, now adding more revenue expected from the oil. It is something that they need to think about, and also to act basically on that. So exporting oil and also producing more from Russia, and not to comply with any agreed numbers, that has always been concerned, and not only with Russia but all of us. There is very few countries that they really comply with the quotas, basically. And everybody knows
I suppose
that.
when it comes to Russia, they're the large actor, right? And I think
Indeed.
maybe
Indeed.
the Saudi is of course as well, and America, but they're not part of this thing.
Of course,
Getting
but you have to remember, Sean, that it is difficult to monitor the Russian exports. There is a majority of it goes through the pipelines, and God knows how much is the volume.
Hence the problem, I think, which is why His Excellency or His Highness gave the detail of how they're going to be holding them to account.
Yes.
Vandana, the announcement this morning in terms of it wasn't an announcement yet, actually. It was reporting OSP numbers out of Saudi. Were reported by Reuters. They're due any day now that they will be for the flagship Arab Light crude to Asian customers in January. They'll be down for the first time in 7 months. Clearly, the pricing is challenged here. Your thoughts, Vandana, on that decision?
Before I get to that, and I know you didn't mean to make this an OPEC plus post-mortem special, but
no. Well, it's certainly the
talk of the town now.
Well, I think I'm quite keen to talk about that in the context that President Putin is coming to Saudi Arabia today and to the UAE. First visit in a year and a half or more.
And Mr. Novak is accompanying him, so I'm sure the two energy ministers will meet. And I would be interested to see if there's some more sort of jawboning efforts coming out of Saudi Arabia later today. Perhaps not. Perhaps they think they've done enough. What I was about to say about OPEC Plus is they might want to put a public relations makeover in their New Year's resolution list.
Absolutely.
Talking of OSP,
it wasn't lost on anybody that the company that got the interview on Monday was Bloomberg, who had been excommunicated for the last 9 months.
Yes, and the minister made a note of that as well. That as if I think he was suggesting that look, everything is all right. It's we are not fighting like cats. OSPs is a very interesting dynamic in the market always. And I think it's also tricky because when the Saudis and then a lot of the Middle Eastern NOCs tend to follow what Aramco does, when they drop and especially substantially drop the differentials in the OSPs, that itself gives a signal to the market. So, if you're lowering your OSPs, especially to Asia, which is the biggest market for the Saudis and a lot of other Middle Eastern producers, then that tells you that the physical market is probably weak, that the Saudis are seeing a somewhat softening of demand, especially from China. Now, I think that's been the story, the narrative through the latter half of this year, that China did buy a lot. They stockpiled a lot, especially through the first half of this year. And they have gone, they are backpedaling a bit. Their refining rates have gone down. And, we saw earlier this week, the PMIs, the manufacturing activity is not looking good at all. In fact, I was just looking at the numbers on manufacturing activity in China, and since April, every single month until November, except for September, has been a contraction, which is a lot. If you see contraction in manufacturing activity in the US and the Eurozone, and you don't give it a second look, it's taken for granted. But a country like China, exports not picking up, manufacturing not picking up, even the services sector, which was doing relatively well, was barely in expansion with the 50.2 number for the services PMI, according to the NBS official data. So demand-wise, and you were asking earlier about the demand picture, but just winding all that up, I would still say that I think the activity that we are seeing, the sell-off we are seeing in crude probably is a bit overdone. I think I do feel the market is there's a bit of a hype around and the echo chamber, as I mentioned earlier, around softening demand and surplus. And I think the market is underestimating a little bit the additional OPEC plus cuts. So, the economy might do all right in the US, and not so much in Europe, but in the US. So we may see a turnaround in the sentiment after all, more so in Jan than in December.
Well, I think, as we said at the beginning, the proof is in the pudding, so to speak. Maliha, will it be enough, do you think, to attract back the fund managers and the managed money, the speculators, as the OPEC Plus likes to call them, that we're seeing the net long position down to near record lows? Anything going to attract that money back into the market?
So we have a few catalysts coming up in the next 2 weeks. We have the inflation data this week, the payrolls data, but most importantly, we have the FOMC next week. There's a lot of talk about what Powell's going to do and how many rate cuts is he going to do. The market is obviously stepping ahead of the Fed by calling for 5 rate cuts for next year, which is a bit aggressive in our opinion. I think they're waiting for
5 rate cuts would indicate a complete collapsing recession. I mean,
absolutely. So the bond market, the equity markets on 2 different disconnects. And if you take a look at some technical rate curves and swap spreads, we know there's a lot of stress in the economy. The Fed may not like to admit it because they don't have a choice. They have the mandate about dual price stability and employment. Employment data is coming down. We saw the jobless claims go up quite a bit yesterday, but it's not weak enough and employment is not high enough for the Fed to do something. So we think they'll actually hold off because they cannot afford a repeat of 1970s, cutting rates, doing QE, and oil will go through the roof, right? So a lot of oil prices, commodities for that matter, depends on what the Fed does in terms of the interest rate policy and QE. But in our opinion, as things stand as they are, the world is going through an economic downshift. And I think that's going to be very interesting. If they do provide some stimulus, obviously oil is going to rally. And the OPEC is actually hoping for that because they'll keep the market tight for that recovery. But we think things are going to be quite volatile because the Fed will be late, as they always are, and the recovery is going to be a lot less delayed as well. So we are not positive right now. Winter is interesting because we can have some winter demand and stuff, going on there. But other than that, we don't see inventories being in a deficit until demand picks up.
Let's go to the survey question, which is focused on the visit by Putin. What is top of the agenda for Putin tour of the Gulf today? OPEC plus solidarity, repairing, or we saw at the beginning of this journey in 2020, of course, Saudi and Russia spectacularly falling out, crashing the market, and then coming back together again. Is this an OPEC solidarity tour as the top priority, or is it geopolitics and war tour? Inevitably, you would want to say all of the above, but what is the driver of this visit, this moment of somewhat surprising, because it's so rare President Putin leaves Russia these days? What's, do you think, the driving trigger here? Talk about the war in Palestine and Ukraine, the geopolitical position, or is it OPEC plus solidarity? What is the view of the room here on that point? Ali, we're looking in the region. We're hosting COP28 here in Dubai. I was in the Oman Pavilion the other day. Lots of interesting talks. There is one of the narratives emerging out of week one is the discussion, a talking point of whether we will be including in the communique or in the COP28 statement the phasing down or the phasing out of hydrocarbons. And that debate is raging up at the COP28 campus this week. I'm wondering, from your perspective, does it make a difference? Will the energy markets, the oil markets, care which one of those two pathways COP28 chooses? Should they care? Your thoughts on that, where COP28 intersects with the daily, weekly, current energy markets?
First of all, we should really thank United Arab Emirates for hosting the COP28 in a very wonderful image, and it's a very good event. And so far, all the box have been ticked almost. Creating funds and focus on renewables and so on and so forth. But when it comes to energy, when it comes to fossil fuels, I think we also again we are exaggerating sometimes, and we tend to forget about the need of energy to the third world. And we keep on, focusing on things that it only suits the West it ignores the need of the South, the Africans, and also the Indians and Pakistanis. We need all sort of energies, especially at the moment and for the years to come. We need all of it, and more it is to oil and gas rather than anything else. So to start talking about reducing or start talking about less investment on
phase down or phase out.
Phase down, and this kind of words, it's just creating an issue and creating a problems. We have enough statements from EIA or IEA that I think IEA, sorry. Yeah, and those were enough at that time. So we don't need to go through that again through a very respectable organization like COP28. I mean, they have to be realistic, and also they have to consider that there are people in this world, they're still using very old methods of energy. So let's just focus on making the world a better place for all of us and for the generations to come. But nevertheless, is to talk about how can we produce a cleaner fossil oil rather than trying to talk about reducing or making a timetable for when are we going to get rid of this energy that.
Ultimately, I say ultimately the technology solutions needs to come for the emissions rather than in some ways the production.
Yes, absolutely.
Vandana, the other sort of story overnight, which welcome your insights on, was the decision by Moody's to lower the credit rating for China to negative from stable. I mean, as a headline, it looks dramatic, is it?
No, I don't think there's any drama in that, and I think as the headline itself, or as the text says, it's yesterday's news. It's a little bit of an late reaction, I would say. I don't see any equities or any risk assets actually reacting to that headline this morning. So look, as far as China is concerned, of course, the year started with a lot of optimism, a lot of bullishness in the oil markets that it's going to be like a rip-roaring recovery in China. Nothing of that sort has happened. Sean, you'll remember, I have said this on your program since the start of this year that no, it's not going to be that phenomenal. And let's keep a close look on the macroeconomic indices, and all of which are telling us that it's going to be a very, very difficult recovery. So I'm glad I was on the right path from the start. As we look at 2024, I think a lot of those China optimists and oil bulls related to China optimism have a much tempered outlook. In a way, I'm glad, because that's going to set us on hopefully a more realistic path as we do the calculus on the demand and supply picture for 2024. A quick word on India as well. So Indian growth actually outshone Chinese demand growth in percentage terms this year. So 5.8% year-on-year growth in Indian fuels. China apparent demand, let's put aside the double-digit growth in crude imports. That's a bit misleading. China apparent demand was up about 5.6%, about 900,000 barrels per day. So Indian demand growth, even with 5.8%, is like 270,000 barrels per day. So I think it's important to bear in mind that it is the third largest consumer. It is probably had the fastest growth in oil demand this year, but in absolute terms, India adds very, very little, certainly nothing to replace any softness in China. And, that would be important to keep in mind. And for 2024, also, I see Indian demand growth also starting to soften a little bit. The economy is doing well. The Indian stock markets are like rocketing up. But I think the oil demand... the oil demand growth will be a little bit softer in India as well in 24. Certainly so in China too.
Maliha, last word to you, a survey result. The outlook for, you mentioned obviously the Fed and the Fed meeting coming up. OPEC solidarity sort of is the leading. We'll post that survey question on the other channels after the call. But Malia, your thoughts on where the other central bank monetary policy makers go? There's still legs in the ECB for more rate hikes. The outlook for Europe in all of this, we've talked a lot about China from a demand point of view, the US. Where's Europe as we reach the end of 24? Still alive, I suppose that's the achievement.
Well, Europe has a lot deeper systemic problem than the US does. They are definitely not going to be raising rates anymore. Effectively, they have a 6-month lag policy on what the US does. The inflation expectations just came out yesterday. They were higher than expected. So Europe has the same systemic underlying inflation problem. But as the US economy and the rest of the world sort of takes its inflation view down, Europe will actually eventually cut as well. But they can, just like the Fed, they cannot preemptively cut right now because they had that inflation problem. Eventually, the problem with Europe is it's debt. That's massive debt. They never reversed their balance sheet as much as the Fed did. It's just been growing. So the question is, where does Europe actually grow? And, they've had 3 quarters of probably negative growth. So they're technically already in a recession. So the economic policy really will just follow the Fed once the Fed does cut. But global central banks have started cutting rates in the last 3 months. If you look at across all the global central banks, the key one, of course, is going to be the US dollar and the US Fed right now, as that dictates all market classes, asset classes. Just going back to the issue about the survey right now, it's interesting that, Putin is coming to right now to see the UAE. I think cohesion is a big factor for both of them, right? They both need oil prices higher. Russia needs to fund its war, and obviously UAE and OPEC need to see higher prices to fund their future investments. So I think the talk of cohesion, talks of BRICS, I think we're in a very interesting paradigm shift where the world is shifting away from perhaps a US alliance to perhaps a dual alliance with the BRICS as well as US. I think all these sort of factors will be in the agenda because at some point, this is going to shape our view for petrodollar, trading in oil. There's so many things going to be for 2024 and not many people are talking about, but I think it's going to be a synopsis into what we'll probably be expecting to next year.
Well, we will all be talking about it on January 10th for our Global Energy Outlook Forum around the world in 12 hours. And we'll probably be the next time that we have all of you guys on, and we look forward to that. And until then, wish you all a ho, happy holidays. And enjoy that book that we've sent you for your Christmas reading that will be making its way in the post. That's just showing on now the Outlook Forum on January the 10th. Brent crude oil this morning, little change, but trading at 77.21. I suppose at the beginning of the year, if you gave that as the average, everybody would grab it. It's still a nice chunky number, meets most balanced budgets, although 80 may be more preferred, but ultimately on the average for the year, they'll get their 80. And I think everybody will be relatively content with that. It's all about next year. We're $20 down on average from 2020 from last year, with the average closer to 100. This year closer to 80. Will we see a similar drop next year to be averaging at 60? That would be a bit of a pain. So we'll very much focus on that on January the 10th. But thank you guys. Really appreciate your insights and participation all year. And today, Malia Bengali, Vandana Hari, and Ali Al-Rayami, the 3 of the best. Really appreciate it. Have a great week and holiday season. Thank you.
Thank you very much.
Thank you. Bye-bye.
Bye-bye.